Hello and welcome to Capital Market Live on Channels Television. I'm Ladi Williams. Time to summarize all that happened in the markets this week. Let's kick off with European markets. Now, we closed slightly higher on Friday as traders reacted to the European Central Bank's suggestion that its latest hike, maybe its last. And original stocks 600 ended up 0.2%, with most sectors and major bosses in positive territory. Household goods led the gains up by 1.4%, while luxury stocks got a boost from Chinese retail sales figures. The Stoxx 600 index climbed 1.5%. That's on Thursday. That was its best session since the start of June, according to latest figures. Let's take a look at what's happening with Asia now. Asia-Pacific markets largely climbed, boosted by a slew of China's economic data for August that were better than market expectations. The Hong Kong Hang Seng Index rebounded to rise 1.1% in its final hour, while Japan's Nikkei 225 climbed 1.1% to close at 33,533.09 points. That's the highest level in over 2 months. So stocks over to the U.S. now. See, stocks fell on Friday as investors wrapped up a volatile week ahead of the Federal Reserve's policy meeting. The Dow Jones Industrial Average slid 288.87 points, about 0.83% to 34,618 points. At its lows, the index completely wiped out Thursday's 332-point rally. The S&P 500 was lower by 1.22% at 4,450 points, while the Nasdaq Composite dropped 1.56%. Big drop there to 13,708 points. Well, joining me now is Gilbert Jopata, financial market analyst and lead at Smart Investor Lodge. As we dive into the global markets, great to have you on the show, Gilbert. Normally we see digitally, but now face-to-face right here in the studio. Great to have you.
Yeah, it's different meeting in real time.
I know, right? So looking at the U.S. now, and definitely all investors, analysts were looking forward to that August CPI data. Finally came out this week, a little hotter than expected. But how do you think the anticipation and the figures impacted U.S. markets this week?
Okay, when we really look at the CPI data that came out, the expected was supposed to be 3.6%, but it came out hotter than expected. And this actually affected the market. If you really look at the bigger picture, most persons look at the smaller picture, and you see the S&P 500 slipped about 6% below the 500, below the 50 days moving average. And most persons may just think this is it, but there is actually a bigger picture to all of this. When you look at the fact that we are moving forward to the policy meeting where we will know if the Feds are going to increase interest rate, and we actually know how this is going to affect the market. I really think the market right now is in a yellow card phase, which could actually receive a red any moment from now. But we just need to pay attention and watch what the market gives us.
Let's hope we don't get a red card anytime soon. But, talking about the CPI and the PPI data, how do you see that, impacting what the Fed is going to do next at the next meeting?
The Feds have reiterated over and over again that they are going to keep increasing interest rate until they have inflation under control. And they're actually looking at about 2%. So with what's happening, we have to watch out for what the Fed chair is going to say. But with the kind of data we have, this actually means that we are going to see another interest rate hike, maybe this year, this month, or next month, we are going to see another interest rate hike. And the market right now is pricing in more of a quarter point interest rate hike, which should happen this month or next month.
And definitely 2023 was the year of rate hikes. Everyone expecting, the central bankers to raise rates. Is it possible that 2024 will not follow suit? Like we won't have, rate hikes in 2024. Is there a possibility of maybe cuts, or we just maintain status quo?
Okay, inflation is actually a global problem. The United States isn't an exception to this. But when we look at how far the Feds have really gone in making sure they could bring inflation under this level, I think from next year we may start seeing more cuts, more moderation, and then till we could have a more inflation at a level the Feds really want from 2%. And I think when this really happens, once we really have macroeconomic inflation under control, I really think that other nations could easily follow suit, because whether other countries have it right or not, macroeconomics end up affecting their own currency value.
Right, and definitely, seeing what the ECB hinted at, last week, that there's a possibility this might be the last rate hike. It doesn't seem like the U.S. Fed is gonna toe that line anytime soon.
So they have reiterated over and over again.
Yeah.
We are going to do anything we can do until we keep inflation under control, and 2% is the target. So until we have this 2%, then I think the global macroeconomic will have some fresh air.
Right, definitely looking for some fresh air. Let's bring it down here now to Nigeria. I know the local equity market was quite bullish, most the couple of months that we've seen, since they've tagged it the Tinu Bull, right here in Nigeria. And we had a negative close for this week. That's the 5 sessions. And right now, it's trading at 67,395. That's what it closed at. That's for the index point for the market. So looking at where we are now, how you seeing the NGX, closing the year out? It's had a fantastic, first half, for 2023. Do we expect this bullish trend to continue to the end of the year?
I think there are a couple of factors we should pay attention to. Even though we really had a great year, this week we actually shared over 700 billion after it was categorized as unclassified, and this really will have an effect on the market. First of all,
and looking at that unclassified, that classification, from the FTSE index there, what does it really mean?
They are really looking at the standard, and I think the major cause is liquidity. Liquidity is the issue, and this is because of the FX, and foreign investors really don't have the kind of liquidity that they really want. And this actually means that they are going to remove NGX from their indices, which means that global investors, foreign investors, will have to stand aside and watch what is happening. Liquidity is also going to leave the market at the same time. These actually have, I think, reputational damage and practical damage on the Nigerian stock exchange market. But the government say they have this under control and they are doing all they can to put things in place. But I really think that investors right now should be snake bite careful. There's a green snake in the green grass, and they just need to pay attention and know that that is a risk they need to pay attention to.
Right. So at the end of the day, this is for foreign investors, and majorly we've had domestic investors here, pushing the market. Participation has been majorly, domestic. So is there a possibility that the domestic investors will not be phased by this classification?
When we look at what happened, still this week, the market still had a rebound, and this was when earning reports really came out there. I really think that local investors are also doing a lot to support the local economy, but we just can't outplay what is happening when the Nigerian Stock Exchange is put in that unclassified category. We need foreign investment. We have foreign investors already in the marketplace. They just have to be careful right now. And obviously, liquidity is going to leave the market. And most of them will still have interest in the marketplace. Will just stand aside and look. So we just have to pay attention to that. I think that an investor who is not paying attention to that is not paying attention to risks. And risk management is everything in the marketplace.
Risk management, definitely everything. And we got the inflation data for August, and definitely another, new high this time. How do you see that impacting, the local market here? Because it seems like even though we've hit new highs, with inflation, investors here are still unfazed.
Okay, first of all, we will still move back to foreign investors. Foreign investors don't like investing in a country with high inflation. So this particular data, I still think is going to make foreign investors still pay attention and look what is happening. And when we also look at that inflation data, this actually means that the purchasing power of consumers is going to go down. And when this happens, it means that their demand for product or service is going to go down, which will in turn affect companies' profit level. When we also look at the interest rate, because with this high level of inflation, the I think the interest rate is going to be increased very, very likely. When this happens, it also means that corporation will still have a little bit of challenge getting loans because of the interest rate hike on those particular loans, which will in turn still affect companies' investment as well into the marketplace. So the CPI data, inflation, as well as the new upgrade we are having right now in the stock exchange market. It's something that we just have to pay attention to. The market has done very well, and there's nothing wrong with taking profits, except you have long-term investment goals. But these are actually things you must pay attention to, reevaluate your investment portfolio, and know when it's time to take profit along the way.
And I remember, when earlier in 2023, I did keep saying that, this is a tough year for, investors. And we're used to hearing that you can make life-changing money in, most of these markets, and, how some people have actually made money in the past, in these markets. But looking at the macro headwinds now, it almost seems like going forward, it's going to get really tough, making money in any of these asset classes, from crypto to capital markets, even fixed income, is looking more and more difficult. How are you seeing it?
I think in any marketplace, there is something called timing and there is seasonality. Farmers may really understand this thing better. There is actually season to go plant your specific, goods or your seeds. There is a season for it, yet there is also timing. There is time for planting, there is also time for harvest. When you look at what is happening in most marketplaces, why most marketplaces are in a bull market, some of them are in a bear market, which gives you opportunity to take profit in one harvest and then get your seeds ready while the bear market is going on in other marketplaces, so you planting your seed. So it's actually a great year if you really look at what's happening in the market for the investor who holds on to cash. That's why I think holding cash should be part of one's investment portfolio, because when the market gives you an opportunity, you actually need cash so you could take advantage of such opportunity.
And you don't want to sit on cash too long, because you can also miss the train, I presume.
It depends on your investment strategy anyway. We know Warren Buffett sits on cash for about 10 years, waiting for the opportunity to get into the market. Meanwhile, there will be another investor out there or a trader who you may actually be looking at some months or some year or some week. So it actually depends on your investment or trading strategy and also your investment plan, which is some set of rules and behavior that will inform you on the kind of actions you should take in the marketplace.
All right, let's drill down, on the digital market now. Some know it as cryptocurrency market.
All right.
Definitely, that has been touted to give, life-changing returns. But it's been a long bear market, even though some people say it's a bull market right now if you zoom out, from the chart. But is it still possible to make life-changing money in this market?
We have seen this over and over again. It is very, very possible to make life-changing gains in the cryptocurrency market. But I think many challenges many persons have is that they don't have the right skill set, or they don't have the know-how to do research to get into the marketplace. We have seen before asset classes do about 4,000%, 8,000%, 12,000%, and even more. I've seen some do over 40,000 gains, but I don't really want to go much into those assets because those are more of, they come with higher risks. But we have seen assets that come with lesser risks and still have ability to give you these gains. But it's always that investor that have that knowledge, you have that skill, and you also have discipline and capital that is always able to make that gain. We are in the bear market right now. Many assets are selling at discounted rates. We also have new project or companies building there as well. You could see great thing. Why I love bear markets is because it's easier for you to find projects or cryptos or assets that can actually give you life-changing gain, unlike in the bull market. The bull market is actually overhyped. It's always overpriced. But in period like this, you could look into team and see that this team is really building. They are still upgrading their technology. You could see that their community as well is growing, and they are providing real solution into the marketplace. So these are actually great moments to actually plant those seeds that will actually give you that life-changing gains through the digital markets.
Right, and definitely research plays a huge role in this. We'll take a quick break now. When we come back, you tell us how much research and due diligence plays into investing in any of these markets. Well, we'll still have Gilbert Japata right here. We'll take a quick break now. When we come back, we'll dive in more. You stay with us. Welcome back. Still watching Capital Market live on Channels Television. I still have with me right here Mr. Gilbert Japata, financial market analyst and lead at Smart Investors Lodge, and we're discussing, how you can still make life-changing profits in most of these markets, even though the macros are really, really difficult. So, Gilbert, still great to have you here, and definitely research. I keep hearing, do your own research, in most of these markets. But how does, doing your own research, due diligence, how do you do this right? When you're talking about research, when it comes to digital markets, capital markets, how do you do a good research to make that right investment?
I think this is a very interesting topic because this is a marketplace I've been for several years, and one major mistake I always see many persons make is their inability to do a research, and that will bring me actually to the definition of investing by Benjamin Graham, who is a professor of economics and the mentor of Warren Buffett, who define an investment operation as one which, upon analysis, promises a satisfactory return and also preservance of capital. So when we are looking at due diligence or your research, you want to make sure, first of all, you're going to preserve your capital, and the next thing is going to come with a satisfactory return. But a lot of persons always dive into the marketplace without doing this examination, because this examination is actually going through available information and data to find out the red flags in the marketplace, and also find out those opportunities which the marketplace presents to you. So if you want to be able to find out these gems, if you want to find out these assets that gives life-changing gains, these assets that have given people life-changing gains, you need to be able to do your research. And when we're actually looking at research, there are broader aspects at which many persons look at, but I like bringing it down into two simple things. When I want to do my research, I'm actually looking for somebody who is smart, and the person should have an integrity. It's a terrible thing if I find somebody who is smart and does not have integrity. It's also terrible if I find somebody who have integrity and isn't smart. But once I find these two teams, I am not interested in what kind of team have you assembled. Do you have a winning team? Do you have a champion team? So I look at the team, I look at their background, and then I also look at their white paper. Mostly we are looking at the digital market, which is the cryptocurrency market. I look at these things, look at the technology which is involved, look at the community, and then when I'm able to see that this presents an opportunity to make life-changing gains, that is when I have an entry into the marketplace.
Looking at the digital asset market now, are there specific, cryptocurrencies that do well in a bull market?
Okay, there is something that happened in the cryptocurrency market, especially. It's heavily driven by narrative. And the market moves in this order. We have the first mover. The first mover is always Bitcoin, and it comes with a narrative, and then it follows by other major market cap asset, Ether, and the ones that may follow. So what happens is, let me give you an example of what's happening right now, and not everybody is paying attention. One, the SEC has taking Litecoin and BCH off their bad boy list. They are like clamping down on a whole lot of other assets. But why are these assets off the bad boy list, like I like to call it? This is because Bitcoin has not been put in any of these regulatory issues. And then analysts are back, to the drawing board, and they are like, these are proof of work assets. They use almost the same algorithm and the same governance as well as that of Bitcoin. So if Bitcoin is cleared off this list, it also means these assets are cleared. And you could see what happened to the price of BCH a couple of months ago. It added over 200% gains after this actually happened. And so is a market narrative. This is how you really know the kind of assets that do exceptionally well. Right now, if you look at one narrative that is also there in the marketplace, is AI. AI-driven assets. But yet, this is not just about because it is an AI asset or an AI crypto. This doesn't mean that it's going to do well. You actually need to do your due diligence. You need to do your research. And also, you need to understand seasonality and timing so you could not just have the right entry into the market, but you could be able to keep what you make. Many persons go into this marketplace, you may be lucky, you step in because you have the right information, listening to someone, but the issue most of them always have is when to harvest.
Because it's quite incredible how, you make, great gains in the market, but somehow the market takes all of those gains back. And that seems to be the narrative with most traders these days.
This is because they don't know what they are doing, and I think that is where the risk really comes in. If you're driving a car and you know where your brake is, where your accelerator is, and you could also move your steering, and the more you have experience driving, you wouldn't really see that to be risks. But I actually think somebody who don't know how to drive a car, you just go pick up a car and you're going into the road. You're not just being the risk isn't just for you yourself, also other motorists out there. And I think that's the same thing when you look into the marketplace. Most persons come in, they don't have this right skill, and then they come in with risks, not just to themselves. If you also have family and loved one, if it also does great damage as well to your finance, they are also affected. So in the marketplace, it's always very necessary as well. You have this skill set, or you have somebody who could guide you to gaining this relevant knowledge, because it's not just about planting your seeds or investing. You need to know the right time to get out of the market. And there are several factors we always look into, so you know when it's time to come out from your investment. Because
what are those signals you look out for to know when to exit a market exactly?
Okay, first of all, I'm not just a met trader, I'm an investor. So there is always something when I look at when I know it's time for me to come out of the market. First of all, I am investing with an investment goal. I have another thing called time frame of outcome. They are setting mathematics we put into place, and then risk tolerance. We really try to put all of this into place. So when it's time for harvest, you will know that the market is doing well, or you have a bountiful fruit right there in the marketplace. So how do I know it's time for me to come out as an investor? Once my investment plan is being met. The investment plan is more like actionable goals, while an investment strategy is more like set of rules and behaviors that will guide you on what to do exactly in the marketplace. So as an investor, once you have your written investment goals and your investment goals is being met, it's time to leave that market. But for traders who go into the market with a more shorter time frame, before you enter the market, you also need your entry. And you also need your exit. And you also know when it's time to cut losses, on time. Or you also have your trailing stop, which means when you're at profit, you move your stop loss up. So at the end of the day, you're not just making money, you're keeping what you make at the end of the day.
Keeping what you make is really, really important at this point. But what are your, actionable tips right now for persons that might find themselves in another bull run? Because they keep saying that there's always going to be a bull run in most of these markets. So what are those tips you'd give an investor right now?
I think something they must know is that they need to invest in the virtues that make you an investor. You could actually do this by maybe listening to a show like this. You could do this by attending seminars. You could do this by taking courses. You could do this by getting somebody who is a coach in the marketplace. When I was a kickboxer, I actually had to get a coach. Wow. Who had to help me, and this actually accelerated how well I learned the game. When I got into the tennis court, like I decided to play tennis, I did not just get into the marketplace, nor did I find somebody who is just a player. I had to get a coach. I really think one person that can actually fast track your learning process and your ability to make results is actually getting a coach. A coach is somebody who have been there. The coach also goes as well into the marketplace with you. I really believe a coach can actually fast track all of this. So gain the virtues that make you an investor. Also get an investment plan, get the right investment strategy, a more tailor-made investment strategy. So you know exactly what you're doing in the marketplace, because risk comes from not knowing what you're doing. So once you know what you're doing in the marketplace, and then you have your exit target, so at the end of the day, you don't just make life-changing gains and go back. you actually keep what you make at the end of the day.
Keeping what you make. Thank you so much. So much to unpack there. Thank you for coming on the show. Mr. Gilbert Jokpata, financial market analyst and lead at the Smart Investor Lodge. Thank you so much for coming on the show today.
It's my pleasure. Thanks for having me.
Right. So yeah, we've been discussing how to make gains in markets and actually keep those gains. Very interesting conversation. So what to look out for next week in the equities market, local bourse. We anticipate cautious trading on the bourse next week in the absence of a strong positive triggers to boost investors' appetite for risky assets. So it's going to be a brand new week for the bond market. FGN bond secondary market is expected to remain elevated, while in the T-bills market, the secondary market will sustain its upward tilt following the anticipated death in the system liquidity. All right, that's it on the show this weekend. Thank you so much for watching. I'm Ladi Williams. I'll catch you again, same time next weekend. Bye-bye.